Right, that should be good to go. Good evening, friends and colleagues, enemies, people without strong political affiliations to the channel. If you can hear me and see my screen, some confirmation would be fantastic. Thank you for joining wherever you're from. We've got some stuff to talk about. Hope you had a nice weekend. Don't know where mine went. I kind of blinked and then it was Monday. I'm sure that happens to you as well. Can't be just me. Good, good. Thank you for confirming that. As I said, if you're here from Twitter, first of all, thank you very much for tuning in. We are live every Monday, Wednesday, Friday, and also we are nearly at 8,000 subscribers. If you want to quickly hit the like button, subscribe to the channel. I know it sounds mundane, certainly if you watch a lot of YouTube videos, but it does help and make a difference. Second of all, thank you to Bybit for sponsoring Technical Roundup. Absolute ledgers. You can see the channel as clean as a whistle. No crazy shill stuff or content we don't want to do. That's thanks to them, so go click the link in the description so we get our bread and water. So, with that said, with all the likes, subscriptions, etc., let's just start with market analysis. And the first topic, we're going to first do Bitcoin and then ETH. And I think they're in different spots as well, and one is much clearer than the other. Maybe you'll agree, maybe you'll disagree. So, with the monthly time frame, the first, and we're starting with an empty chart, and then I'll bring down the one where I've got my levels a bit later. But let's start with the question, like, has the monthly, like, should we still trust the monthly time frame, right? Because there's an understandable amount of kind of critique that we had the monthly close above, all the monthly closes were bullish, and then the market took a dump. So does it still make sense to even use this time frame or look at the levels, or can it be saved, I guess, is the dramatic version of that. I think there are still a couple of areas which matter, certainly if we're just 1 week into the month. We'll talk about how to navigate them as well. So as to the levels and analysis, so monthly, I think two levels that matter are 10.7, which is the highest close and shifted and, you know, supported the monthly break in market structure. And also this monthly highest close, which is like a previous support resistance level at 10.3. So I'm just going to quickly label both of those on the monthly just by adding an M, and then we can discuss the context, right? So on the monthly time frame, price is like in an area of support. As we've discussed before, given we're dealing with pretty high time frames here, there's no crazy incentive for price to ping off them perfectly. It's really the higher time frame closes in these areas that are going to give us hints and suggestions as to developing price action, right? So generally, if you've been on previous live streams, you'll see that when I'm dealing with monthly levels, it'd be pretty unreasonable to just trade them on the monthly time frame, because I mean, how many trades are you going to get? Really not many. So what I like to do to be conservative but still somewhat balanced is to look at the weekly closes at monthly levels to get evidence of direction. I think that's a good compromise. I've got a video on time frames on my channel, which you can go check out, and it's kind of how to put all of this stuff together. So to answer the question, is the monthly time frame toast? Not yet. But it's not looking great when we do look at some of those weekly closes. So on the monthly time frame, if this is the case that we close below, or pretty much given the lower time frames, show weakness below the lower boundary of this little shelf we've got of confluent monthly support at 10.3, there's a good chance that in terms of just structure, we have resistance at the top of the range, resistance at the top of the range, a break of resistance, and then if the bottom boundary fails, I'll kind of have to interpret that as a failed breakout at the top side of the range, which normally suggests, you know, just go back to our normal TA diagram sort of stuff. When you've got a high time, you know, range on any time frame, high time frame, low time frame, doesn't really matter. Certainly one that proves to be resistance. When you get a break of that range that pulls back and fails to find support at the level, the two areas of interest, I mean, generally, you'll be looking at the opposite side, you know, from range high to range low, but generally you'll also be looking for evidence of a higher low somewhere between, right? Because if high time frame market structure is bullish, as discussed previously, and you get this type of higher high structure, the two areas from which market can continue being bullish, as in show continuation, the first area is where market structure was broken, and the second area is some sort of higher low level between the low that led to the higher high, and there's some magic fib retrace nonsense we can look at as well. So applying this sort of stuff to the chart right now, if we get weakness, ideally on the weekly time frame to get like some real evidence, but I mean monthly close, sure, but we've seen the strict reliability of those recently. Market is like an area of support. Weekly weakness below 10.3 would suggest this type of model where we fall back within the range, and the two levels to look for are the potential higher low level and then the bottom of the range. In terms of defining those levels on the monthly time frame, what I'm personally comfortable with, I think really the first kind of trouble area for real is 9.2-ish. It's not the perfect level. You could even use a more recent anchor closer towards 9.1, but even on a monthly level to level basis, that's certainly where I'd expect something to happen if this is a fall back within the range scenario. But then we also need to consider, you know, if this is a kind of failed breakout on a high time frame, like fake bull market type of thing, it's probably not going to resolve with just $1,000 move down. So beyond the trouble area, I think it's reasonable to deal with the old range, which is defined by two levels, 7.7 as the upper boundary, highest close, and then 6.3 as the lower boundary, lowest close. So we can kind of put this level, let me just lower my mouse DPI, this is very difficult to navigate. We can kind of put this level in brackets, depending on how bearish the market looks. Worst case, this just gives us a bounce, but really we've got the range high failed breakout, and then the next real high time frame level of support falling closer towards 7.7, which we know is a high time frame area on not just the monthly, but it's one of those nice weekly levels that we didn't get to do too much business at. Okay, so just to recap, monthly area of support, if it's going to do its job, we need to start seeing weekly closes at least above 10.3, if not 10.7 for stronger evidence of continuation. But if weakness persists below the lower boundary, look out below, because FTA on the monthly is closer to 9k, and then we've got really, so this is like mediocre support, or like, you know, first trouble area support, not the best level in the world. Typically wouldn't be trend reversing, and then the big boys come in at 7.7 and 6.3. And again, context is important, right? If we have this crazy, you know, high time frame failed breakout through the 10k area, is all of that going to be resolved by just $1,000 drop to 9k? If that is the case, at least on the higher time frames, that seems less plausible. And I guess, if I'm not going to speak for Donald, but I guess his logic would mirror this to some extent, that if you get a high time frame failed breakout, you can expect a high time frame move in the opposite direction to be the consequence of that, right? These high time frame levels have consequences. So that's kind of the monthly context. And now that we've defined our boundaries, we can look at the weekly and see what the price action is looking like at those monthly levels. As you can see, it's not terribly positive at the moment. I'm just going to delete these for now. And the weekly levels that I want to add, I think the 10.3 boundary does a decent job. Again, reminder, this is our monthly level. It does a pretty decent job of covering this whole sort of area. Mid 10k has always been a bit kind of messy, and the reason for that is in this mid 10k area, you've got, you know, if you're using the wicks, you get a much higher level. If you're using the first candle body, you get a slightly lower level, right? If you're using the consolidation before the breakout, which is kind of what I prefer, then you get a different level entirely. On the daily time frame, you get 10k kind of strict, 9.8k. It gets a bit clustered. So what I prefer to do is to, in terms of 10k support, I'm happy to use the monthly 10.3 as that level. And then on the weekly, what I think really matters is the pre-breakout consolidation defined by kind of 9.6 and 8.7. We can just add those levels as well and label them on the weekly. So you can see we're building a top-down view here as well. So this is our weekly support and resistance cluster. And you'll recall this is the range that we traded in, broke out of, and it looks like a retest of that is plausible. Now again, hopefully you've seen this from other videos, but a technical structure that's important is when price gives an impulse, consolidates, and then impulses in the same direction. That consolidation is fantastic for directional bias. Generally, bullish bias if the range high is acting as support. Bullish bias at the bottom of the range, simply because it's so good for invalidation. It's kind of the do or die spot. Within the range, that's where intraday traders take over and, you know, trade from high to low to midpoint, etc. And those are really, you know, these structures are really nice to trade should the market come back to them. So now that with this context set, You can just literally just look at these levels, and I think there'll be a decent roadmap for the weeks to come. 10.3, 10.7 monthly, 9.6, 8.7 weekly. If we just zoom in on the candles a little bit, my current read, just from a macro general point of view, I think it's going to get choppy. I'm really 50-50 on how trading works out after you get a big weekly bearish engulfing or a big high time frame nuke. Sometimes setups for me just pop off and it works really well. Other times it's just a complete chop fest, and after eating a plate on a couple trades, I tend to set out. But just assessing the available evidence right now, the weekly time frame closed below 10.3, right, and it's currently finding resistance at the level. So from where we are right now, yes, the overall context is high time frame support, but just from recent price action at these monthly levels, it suggests that a test of 9.6 is likely. That's kind of the objective. That thing doesn't exist, but whatever. The technicals without my own trading involved. From my own trading experience, if that means anything to anyone, whenever I try to get involved at levels that come close to another level but don't quite reach it, it tends to be a losing trade, right? So even if we get some sort of lower time frame reclaim of 10.3, it's like, oh, this looks really positive. Because we came so close to testing 9.6, whenever I've taken setups at the higher level, thinking, well, that's it, that was the dip and that was the bottom, and maybe this will go untested, that's normally not ended terribly well for me. And I end up getting stopped at the higher level, and then if I were patient, I'd get a trade at the level that I was actually waiting for and planning for. So that's a bit of additional context for anyone who cares about that type of anecdotal evidence. But so what does that mean from where we are now? And let me just add this monthly level that we talked about at 7.6 or wherever that landed, just using this highest close. And you can see on the weekly, the area is pretty self-explanatory, right? It's this, and it goes into the left as well, but previous lows, highs, kind of acted as resistance. I think this was towards the monthly close. And then this is also an untested level, okay? So this is kind of what makes me not nervous, but certainly I'm not going to rush to play strength from where the market is right now, because we have a nice untested level, at least the 9.6, and then as soon as we get back within this consolidation, then it's kind of back to trading a range, right? Some additional context is that if we take this consolidation into account, which I think is really significant no matter how you phrase it, either through technical structure or the point where market structure, the consolidation that preceded the break in market structure, whatever technical system you use, I think it's hard to argue that this isn't significant. So if we look at the recent price action, what if, now this is more on the punty speculative part, we had the breakout of the range to the upside, which failed, and then once we trade back within the range, we offer something similar to the downside. So, the consolidation ends up being the mean. We've overshot it significantly through a high time frame level, and it's not too unreasonable to posit, or at least to be ready for, something happening on the other boundary as well. This isn't normally how I trade, and this is just kind of shooting the shit almost, excuse the French, when it comes to analysis. For those of you who are wondering, where is this bullish? Where is this bearish? What's actually going on? I'm going to give some, what I think are high probability kind of scenarios. We know that 10.3, 10.7, which are quite close together, is a high time frame monthly area, right? So if you want to play strength, there's no shame, right, in just waiting for that area to get smashed. So 11K gets smashed and we trade back towards, pretty much the top. At that point, I think that's, a very valid case of the bottom being in, and then either any pullbacks back into structure and continuation, or just a break of that level that offers a reasonable consolidation on the lower time frame to get on board. I think that's where longs will feel much safer. Okay, because currently, again, just all I can do is look at what's in front of me. We've closed below the level and are retesting it from the underside. And even if we get a bullish pop from equities, etc., some help into trading towards 10.7, that would still technically be retesting resistance on lower time frames, which is why I prefer the scenarios of strength where there's an unambiguous kind of break above this high time frame area. So the price action below will suggest that this is kind of the monthly wick being formed. Then we can take easier longs to much higher targets, kind of the 14k level from the monthly, etc., rather than playing bounces of what's currently a bearish retest and having a tough time doing so. So bullish plan, kind of the brainless, please resume the bull market. I don't really care what happens in this range. Please make my life easy. Bullish plan is smash 11k, and this doesn't look like a top, right? And then that'll go flying. That's kind of my preferred macro approach. Back within this consolidation, right? So that's one setup. If we drop back within this range, and I think there's a good chance of that, given how the weekly chart is looking at the moment, falling back within the range is kind of a different game entirely. As I said, for directional bias, it's kind of fun and roses as long as the bottom of the range doesn't fall out. If you get any high time frame or weekly weakness below 8.7, then I think that there's another $1,000 teleport in store, and we at that point will have gone from monthly mid 10 to monthly 7.7, and that would really become the do or die level. But again, I trade one level at a time, so looking at the levels on the chart, what's the long? Something like this, right, through 11k, that's the long. If we drop back within the range, and this is indeed a bearish retest, I think there's a reasonable setup from 10.3 to 9.6, but you can see there are much better opportunities where there's more space to trade, which is something I generally look for. If we fall back within this consolidation, from a macro point of view, it wouldn't be bearish per se, but I think you've got to be ready to swing both ways, if you will, like Donald on a Friday night, and be ready to trade from range high to range low, and also the slight kind of deviations on the top side, underside, and just trade this consolidation kind of like we traded it here. Okay, I don't want to read into it beyond that on the weekly time frame. If we're trading back between 9.6 8.7, the usual technical analysis rules apply, and I'm not going to go hunting for a bottom, but I do know that I'd prefer strength either at the upper boundary or on a failed breakdown below the lower boundary. Okay, I know this kind of is not the sexiest way of trading, where we kind of just look at one level at a time and look for space and whatever else, but that's how I do things, and unlike the past couple of calls, it's generally suited me quite well. So let's summarize really quickly Bitcoin right now. Point number one is from a really high time frame kind of macro perspective, 10.3 to 10.7 is an area of support. Okay, so 1.1, we can say if this fails, then there's a good chance we move towards 7.7 on the monthly time frame. Okay, so 0.1 is about the monthly time frame. 10.3, 10.7, if that fails, and there's some evidence of that right now, but again, plenty of left in the month to fix stuff and wick lower and rescue the monthly, all that nonsense. But failure at 10.3, 10.7, you can see the FTA concepts from the video coming into play as well. We'll play it from monthly level to monthly level, 10.7 to 7.7. Okay, that's point number one. Point number two of the summary, which will come from the weekly time frame. 10.3 was lost. Okay, so that to me at the moment suggests a test of 9.6 as a likely opportunity. This is technical analysis. As a trader, again, I'm probably late to this move and nothing jumping out quite yet. We will look at the intraday time frames to see if there's anything saucy going on. But really, I'm kind of expecting chop and not the best conditions in the world. We'll see if that changes. But anyway, on the weekly time frame, 10.3 lost. If that remains the case, so if this doesn't get reclaimed, etc., and even really if it goes above 10.7 into 10.7, this is still kind of bearish retest territory on the weekly, so I could even change that slightly. So we could say below 10.7, right? Below 10.7, we can say 9.6 is the first trouble area, okay, on the weekly time frame. So as long as this little box, shelf, whatever you want to call it, on the monthly continues to act as resistance, as it's doing at the moment, given the close below it and the retest, as long as this area holds, it's very likely that we trade back towards the range, at the very least wick the upper boundary, but I think we may spend a bit more time there should that materialize, okay? And so 2.1 on the weekly is simply, I'm going to call this the weekly range, okay? Which for me is defined by 9.6, the upper boundary, 8.7 as the lower boundary. And the trading to do within this range, I'll kind of make this point 2.2. From a low time frame basis, right? We just play level to level. So from the range high to the range low, from the range low to the range high, and we kind of go back to hell week, or hell, however long this was, 2 months that we spent in here. The same rules apply. At that point, I'd kind of mostly ignore high time frame bias and just play the volatility, assuming it doesn't die off. That seems to be the more reasonable thing as a trader. So low time frame level to level, high time frame, I'll say generally positive slash bullish as long as above the lower boundary, so above 8.7. Because again, the way these technical structures work, when you get a strong impulsive move in the market, consolidation, impulsive move, the whole thing is technically support. Yes, we have split it up into the upper boundary and the lower boundary because those are the ones that matter. But technically, the whole thing is support for continuation. And that's only invalidated if the bottom boundary falls out. And at that point, we can make that 0.3. So weekly below 8.7, we'll have a chance probably, given the monthly time frame we're playing out at that point, to get $1,000 swing or so towards 7.7 on the monthly time frame. Okay. What are my ideal long scenarios if we fall back within the range? Well, I mean, in terms of good longs generally, as I said, the brainless one is wait for 11k to get smashed, and whatever happens here happens here. Who cares, right? Let the market do its thing. In terms of within the range, upper lower boundary. On the lower boundary, it's fairly self-explanatory. Any failed bearish retest, so like a daily close below, oh my god, bearish retest, which, you know, doesn't really work out. Something like that would be fantastically risk-defined towards the range high, and then the next level. Or on the upper boundary, again, falls back within the range, you know, do whatever you want within here, and then get back above the upper boundary, give me something risk-defined, and that would probably be a good continuation signal. We can spend more time on that a bit later, but I just kind of wanted to lay out the macro landscape in a kind of crazy whiteboard scientist kind of way. So you know what's above us, you know what's below us, you know how to trade what's above us, you know how to trade what's below us, and you also have a reasonable high time frame bearish target if ship continues to hit the fan. Was anyone able to follow this? Was this at all helpful? Did that make sense? If any of that is helpful at all, any likes on the video, I mean, you know, guys, it actually helps the channel a lot. We've noticed that, so I'd be most grateful for your clicks. And also, the videos are replayable on this channel. It's not like my Telegram where it's some cult meeting that gets deleted immediately. It is replayable, so you can watch it at your own pace, make your own notes, agree, disagree, do all that cool stuff. And again, we're almost at 9k subs. Thank you for all the support. You guys are amazing. So yeah, that's kind of the technical analysis side of things. I think the levels are fairly unambiguous. And these, I think, in terms of a roadmap, I really don't think you'll be shortchanged if this is kind of where you're paying attention. Okay, so you know, I used to literally reverse engineer charts from my favorite traders, where I'd go back, like, you know, Tom Dante's FX calls from like 2013. I'd draw the same levels he would tweet and then try to learn where they come from, etc. So I think that's a very effective style of learning, if I can be so humble to suggest that my level selection isn't totally trash. So, you know, if that's your cup of tea, here they are. We can take a look at the daily. As I said, chop kind of seems likely. I've seen some arguments suggesting that, oh, you know, well, we broke structure at 11k, therefore this is like a god short, you know, short the bearish retest, etc. It could be, but it just probably, the chart at that point would look a bit messy to me. At the moment, the bounce is totally reasonable, coming from the highest close within the daily range, right? Which is, and also psychological support, whatever that means, at 10k. So for me, the reason for this particularly choppy price action is because price is trapped between two really nice levels. The first one being the daily at 10k, but also the underside of the monthly shelf at 10.3k. For intraday positioning, yes, I do think there might be a short-term, you know, if this bubbles up and breaks out, there might be a short-term long to take from 10.3 to 10.7. And maybe even hold on to that as a bit of a moon bag in case this is the monthly wick. But I don't think that's the easiest trade on the table. I think for me, the easier trades on the table are either, as discussed, back within this weekly range. I think that some totally reasonable opportunities will arise if that's the case, or the high time frame break through this 10.7, 11k area that I discussed in the beginning. For me, I always look for the easy trades. Might sound counterintuitive, but it's always... there's a reason they're the easy trades, right? It's because they're difficult to execute when they're actually happening. So the least you can do for yourself is to at least do business where it makes sense to divert your attention, right? So kind of between here and people asking for low time frame analysis, like, yeah, maybe something like this through 10.3 to 10.7, or maybe from 10.3 to 9.6, but those are much harder trades than the ones discussed. As always, that's subject to change. If something really clear sets up on the intraday time frame, you might see me pinging a couple of these level to level, but certainly any trades I take in Bitcoin will be predicated on these high time frame structures. So I definitely think they're worth paying attention to. Okay, that's Bitcoin. If you're going to stay for the rest of the stream, then I will happily answer questions and we can, chat shop. I want to do ETH for the people from Twitter here for some quick analysis. And again, thank you very much for joining us. I hope you do so every week. ETH monthly, I had a really fun time buying 393, sitting offside for 30 points and then puking my entry just under break even. That was a really fun kind of religious experience for me. So thank you, Mr. Market, for providing me with that character growth. In terms of the monthly time frame, it's slightly further away from support than Bitcoin, because the two levels I've got on the monthly are pretty much 400 and 300, right? So from what we've got right now, this candle looks pretty hideous. The monthly being formed right now, and again, it's a monthly candle. We have to wait till the monthly close to come to strong views, but we should rely on the weekly to get some sort of sense of how this is setting up. My trade idea was fairly straightforward. Close above 394, offer continuation into kind of the midpoint, and then the top of the range. Didn't happen. I feel like I dodged the absolute truck managing to get out where I did, but that's a story for another live stream. For now, the monthly time frame I don't think is terribly helpful. I think there are some better levels we can talk about on the weekly and the daily. Okay? So, in terms of weekly structure, it still looks a bit of a dog's dinner kind of deal, just like Bitcoin, right? Where it had a chance to hold a nearby monthly level of support on the weekly time frame. It was 10.3 for Bitcoin. Didn't work out. I think you can make a very similar argument for ETH, no matter whether you use the exact monthly anchor at 389, or if you want to get a bit more creative with it and use this kind of swing low structure closer to 360 or 370. I think however you dice this, you come to a similar conclusion as to Bitcoin dollar, whereby the weekly time frame is showing weakness at monthly levels. I think the ETH chart is very analogous to that, or comparable, whereby you have weekly weakness, a candle like this just spikes the top of the range and closes below the bottom of the range. That's pretty ugly, and at the moment price is finding resistance in that area as well. Doesn't really matter from a high time frame point of view, kind of 370 or 390. That's kind of noise when we're dealing with monthly and weekly levels, but in terms of structure, it tells a similar story that the weekly had a chance to hold up at these monthly levels, and it hasn't done so far. And again, from my own trading experience and anecdotal, blah, 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 all of this sort of stuff, you can ignore it if you like, but I'll still share it with you. When price comes really close to levels and then sets up some sort of lower time frame bait for me to get long, if I ever take it, it'll almost always come back and test the level that I should have waited for in the first place. Just the amount of times it's happened, it's something I avoid entirely. So while a lot of this is TA, I'll also give you my insights as someone who trades these markets. And so there's a good chance, similar to Bitcoin, I'm going to wait for the kind of more brainless trades at my levels rather than chasing the week of trading after a candle like this. Okay. For Bitcoin, we covered where is the brainless long opportunity, and that was pretty much an 11k break once we get back above those monthly levels, which are currently proving a bit burdensome. I think you can make a very similar argument for ETH simply by using the consolidation which led to or preceded this breakdown. I was using the structure in the ETH video as a for bullish directional bias. It allowed me to puke my long in not the worst spot and not have to eat more feces than I did, so I'm grateful for that. I still think the structure is technically valid. So what does that mean? Any runs into this consolidation, I would still interpret as kind of bearish retests on this time frame until proven otherwise. So what's the brainless long? As you can imagine, pretty much this. Break above the consolidation, and then either any pullback or any break and consolidation. Again, I don't have a crystal ball, It's out for repairs at the moment, so I can't tell you what the price action is exactly going to look like if we get strength at these levels, but the macro idea is intact, that this consolidation, if ETH is bearish, is going to act as resistance. Any good evidence that it doesn't, I'll interpret that as the low being in and trade towards those higher time frame targets at like 530, 550, and then pretty much 700, right? In terms of where's the market right now, so that's the brainless kind of long, or the safe long. I mean, brainless, I don't know why I'm using that as an adjective. It's probably the smart thing to do. Certainly if you look at my trading recently. Where we are right now, again, to reiterate, I think no matter how you slice it, just like we did with Bitcoin, it's kind of, yeah, there's 10K, but it's really closed below high time frame structure. I think, unfortunately, you have to come to the same conclusion with ETH, whether it's the 389 level or the closer to the 370s level, kind of no matter how you dice it. For me, the weekly close was below support, and so runs into this area, be it the 370s or the consolidation as a whole, are technically bearish retests until proven otherwise, and nearest high time frame support is closer to the 290 handle. I don't think there's anything on the daily time frame that kind of contradicts this, or will really shift my view at the moment. But you can kind of see the easy long scenario would look like just by adding 2 levels. That kind of red box that we drew out, we can just literally add those levels here as the kind of range high and the range low. By the way, just as a casual, yeah, no-brainer, I agree, Elk. Just as a quick question, when I puked my long, did anyone take that as a really good short signal and take the trade? Because one bloke DM'd me and said my long puke was a fantastic short, which is kind of hilarious, and it makes sense in hindsight. I'm just wondering if anyone else had a similar type of logic to it. But anyway, yeah, daily, one thing I try not to ever ignore is daily market structure. It's just such a reliable indicator, no pun intended, for the crypto market generally. So when daily market structure shows a clear break, especially a recent one, I'll almost always defer to recency. I like to pay attention. And again, no matter how you dice this, daily market structure is broken. So rallies into this monthly level, right, I'll see as rallies into resistance. And so what the brainless long would look like, again, no brainer long, not brainless long, would be either through the top boundary. At that point, that's really conservative, and I question whether you get an entry that's this easy, or if you want to be more aggressive, a reclaim of the range will probably be good until at least the top of the range. Then you can maybe hold a moon bag in case it trades higher. Okay, but anything below, market structure completely wiped. Weekly time frame kind of looks rough, given the close below support and what looks like a bearish retest. So for longs, I'm either going to need to see strength as described pretty much here, or give me something at the high time frame support, which on my chart we didn't quite reach. Okay. I think that's kind of what I've got. Is that clear for ETH, or should I summarize that? Summarize? Okay. Cool. I'll do it very quickly. The easy ETH, the easier ETH longs are back above 389, or if you want to be really conservative, 433 on the weekly time frame. Or if I can summarize that in an even easier way, the pre-breakdown consolidation is what matters. The easier long trades are going to be above it, right? So above the 413 level, no matter how that looks. That's where the easier or higher probability long continuation or bullish trend continuation trades are going to come from. Anything below that, I would be very careful playing on anything beyond an intraday basis, because on this time frame at least, it's a bearish retest until proven otherwise. So kind of why buy resistance hoping it turns into this if you can just wait for this in the first place? Okay, so to be bullish ETH, either get back above 413 or establish some sort of structure closer to the monthly level at 300 or 294. This isn't what that looks like in my view. any rallies into the box which don't do this, I would expect to get sold closer to the monthly level at 300. Better? Does that make sense? Luke says slow kids need more help. No, it's fine. My style isn't for everyone. People might get kind of... it's very difficult as a trader who relies pretty much entirely on discretion and context to try to cover scenarios in the future. The smarter thing for me to do would be like, here are my levels. Hopefully I stream when something happens, because if it does, that's how I trade, but I'll obviously do my best to provide context, etc., etc. The long story short for both Bitcoin and ETH is that the monthly chart is salvageable, so it can be saved, but the weekly is suggesting that the monthly wick or the bottom isn't in yet, given we closed below those monthly levels of support. So monthly support, weekly closed below those levels, so that's not evidence of strength for me personally. That's literally about as clear as I can make it. And again, if you want to hang around for the second half of the stream and ask questions, I'll be more than happy to provide further context. And if you like this type of analysis, again, almost at 9k subs, would love to have you for future live streams as well. Crypto Orion says, what area would you be looking for the higher low scenario? I think it depends on the instrument. For Bitcoin, it's really strange, because when you get into really, really high time frame market structure, you end up coming to some absurd conclusions, right? Where it's like, which high and low do you technically pick, right? So let's say if we pick the low, which led to the higher high, then you would argue, not unreasonably, that market structure is generally bullish as long as 8.7 holds, and beyond that, it's bearish, right? So that would be the conclusion from that time frame. But then, if it hits 7.7, are you going to say, well, market structure is bearish, so I'm bearish at 7.7, or are you going to turn neutral? I am sure if we measure from low to high, the kind of retracement area will land closer to the monthly level. So, I mean, is that really the place to turn bearish? So I don't really know. That's why I don't trade market structure kind of per se. I'll use it for directional bias, but when it comes to high time frames, it gets a bit spotty for me, and the areas you end up dealing with are so large that it's not as helpful for me as it is on, say, the daily time frame, right? It's still something I pay attention to, and that's why I give this 8.7 to 9.6k so much significance, because after this consolidation, weekly market structure was broken. So this isn't something to be laughed at, right? And that's why I give so much weight to this area. But in terms of what area would you be looking for a higher low scenario, I can't really answer that. I'll just have to take it level by level, right? Rentally Retarded says, like your style, simple and clean, fits exact. Thanks, man. Thanks. Certainly try to do that. Ends up being quite rambly, but if you rewatch stuff and replay stuff, it somehow makes sense to somebody sooner or later. Bitcoin, ETH. ETH BTC is the kind of high time frame stuff. We can actually bring down my chart now as well, which would be cool. ETH BTC doesn't look... I mean, it looks alright, right? So... depending on how you have this level, resistance held. A really weird fact on the daily time frame is in the newsletter, which is also a link in the description. That's free, and it will come out. It comes out every Tuesday at 8 UTC. So if you just want the levels, just the analysis stuff Donald and I agree on, it's free. Go subscribe. That's really cool. But like, we have a really old ETH BTC level on the weekly time frame. It was one Donald came up with, not one that I'd ever used myself. And I was like, dude, should we change our level for ETH BTC? Because this is like, I don't even know what this structure is. He's like, no, trust me, mate. It's gonna doom the market. And I'm like, okay, well, this guy knows better than I do, so whatever. So, I've got kind of this highest close and using the range, etc. The level we have from Donald is in the newsletter is literally this small red candle body. And so he was telling me while we were breaking out, like, nah, it's going to be the top, it's going to hit our level, and then the market's going to nuke. And I mean, look at this. It's so absurd. Like a tiny... weekly red candle from mid 2017. He chose that level out of anything, and that's where the reaction came in. Kind of silly, but made me laugh. Yeah, ETH BTC, it looks okay for now. There's nothing overtly bearish, and the reason I say that was because the market turned at resistance, but it's also finding support at support. In terms of the deep dive levels, it's kind of beyond this range, right? So if it goes up, it'll go higher. If it goes down, it'll go lower. I know, fantastic analysis, but it does matter where there's space in the market. So the reason the break of 36 is significant is because I think that would generally suggest bullish continuation in this market as a whole. And that's been ETH-BTC has been a good kind of trend proxy for crypto, given all the ETH stuff going on. So there's like a 50% move between resistance and resistance here. So that's pretty sick. If 31s fail, then we end up pretty much going to where Bitcoin and Ethereum are now, which is where market structure was broken. So when you have the high and then you got the higher high, whichever way this range breaks, there's a fair bit of space until the next levels are reached. But I don't have a strong view right now because, I mean, both sides are intact, right? So what am I going to tell you? I want to talk about Link. Link at least against Bitcoin looks fine. Looks pretty strong. And the reason for that is, as you'll know, with Link, you have to kind of deal with similar type of structures because it was been trending so hard and not pulling back. These consolidations just end up working really nicely. And you got some positive developments on the daily time frame at such a structure where you've had support. You get the breakdown attempt, which gets bought up, right? This is like strong evidence of buying at the lows. And now it seems like support is intact once again. So purely technically on the BTC chart at least, trading at least towards the range high seems reasonable. My reason for caution on that and in my analysis is because the USD pair is showing the complete opposite. The USD pair looks bearish, and it's basically the same chart but without the bullish reclaim, right? The cluster, support, breakdown, currently acting as resistance. So ideally those two fall in line for a continuation entry. Again, I want to ask myself, where's the stress-free long scenario where I don't need to kind of buy resistance and pray, contrary to my 11.9k Bitcoin long? And for me, that's through 16, 17. So nearest kind of the top of the range, this little consolidation did its job fantastically. So if that fails, there's kind of no resistance beyond that level. So no shame in paying up for a fast-moving entry. But currently, Link USD looks like a dog's dinner. And until it does something like the BTC pair, I'll probably chill out and not do much in that regard. One thing I'm sure you've seen a lot is commentary about the traditional markets, all sorts of correlations, and, when's the next round of stimulus so people can buy shit coins on Coinbase, etc., etc. Again, not a market I trade, so take it with a metric, large measurement of salt. I've got the S&P at support at the moment, right? And technical structure isn't terribly complicated. I think this comes from the daily time frame. And we're essentially dealing with the range that occurred at the all-time high, or the consolidation, where you had the all-time high kind of breakout level, whatever, pre-breakdown anyway, and then support within the same range as well. And the price action kind of speaks for itself on that front. And at the moment, it just looks like a break and retest. Could this be some sort of dead cat bounce? I mean, sure. Look, we have to deal with what's in front of us. I do think what I will state is that falling below 3380s, which is my level here, if the S&P shows weakness and sells off even to the bottom side of the range, which wouldn't be technically the end of the world, but would certainly be rough just looking at how momentum would look from the highs. I can't see Bitcoin and crypto generally rallying if the ES looks like shit. So if equities look really rough, I don't expect Bitcoin to decorrelate or become uncorrelated and suddenly fly away on its own. I'd expect that to drag downwards, especially given how the technicals look right now. It's hard to make a case for bullish decoupling when the market doesn't look terribly strong. Does that make sense? I hope it does. It does in my head anyway. That's all I've got for the majors and stuff. And hopefully the Bitcoin and ETH summaries and analysis, etc. made sense. Again, if you're here from Twitter and all that, love to have you every Monday, Wednesday, Friday at 7 UTC. I'm also uploading weekly non-live stream videos to the channel as well. So subscribe at least for those. There's some some interesting content coming out there, I'm sure. But yeah, let's kind of chill out a bit. I felt that was a bit presentation-y. So if you have any questions, something didn't make sense, if you want me to go over something again, maybe anything from the watch list you want me to take a peek at, the floor is yours, chat. Let's talk. And if you posted a question earlier, can you just post it again? Because I'll just reread them. Brendan says, "Are you not allowed to curse on stream anymore? Notice you've been avoiding saying, shit all stream." No, I can swear. I've been avoiding it not because of censorship. It's kind of self-censoring, just to keep things a bit more tidy. Ranak says you shouldn't have longed at 11.920. I think Ranak, who made the same joke in the last live stream, has a bizarre understanding of what qualifies as humorous. Maybe there's some cultural barrier here, but that stopped being funny exactly after the first time he said it. So not terribly sure what's being implied there, but take your shot, mate. I will happily be the low-hanging fruit to make yourself feel better off of one of my bad trades. Do you consider the dollar index when trading Bitcoin? Very loosely, kind of in terms of context, sure, at times. But it's not something where I have a strong directional bias from the dollar index, and then accordingly I will trade Bitcoin only one way, etc. I'll pay attention to it, but it's not an ironclad feature of my system. Brady says, thoughts on the stimulus vote this week may push markets bullish. I mean, there's certainly a chance, right? And it'd be a good place to do it technically, given where the S&P is. But again, for Bitcoin, and for ETH, I've got slightly stricter requirements. Given the weekly closed as it did, I'm going to need to see a lot more than a bounce. Because again, just setting the context, we have monthly levels at 10.3 and 10.7. We look at the weekly time frame for clues at those monthly levels, and the weekly time frame is suggesting that this area is resistant. So even if we do get a bounce in the week on some good news, I'm going to need to see at least a weekly close through 10.7 in order to look to follow up that strength. Again, monthly levels, we assess them on the weekly. Weekly looks bearish because it closed below, so bounces even into the upper boundary are technically bearish retests until proven otherwise, and I'm not scared of missing the move simply because of how clear the easier scenario is and how much space there is to gun for if that ends up playing out. Hope that answered your question somewhat. White Bubbly Soup, please talk about why you stopped using any oscillators. I'll still peek at them from time to time, just to get a sense of context. But the reason I stopped using them was because it was too difficult. Because, the time I stopped using them was when I was developing a fairly rigid trading system with like setup A, setup B, and just quite strict rules, which I've moved away from, and discretion plays a much larger part now. But I just simply found at that time, when developing those rigid rules, the oscillators just came up with a lot more noise than they did useful filtering materials. So I'll still peek at them. I might want to get a bit of context as to high time frame divergence and all of that sort of stuff, just to see where the market pulse is at with these things. But it doesn't play a recurring role in my system. Not that there's anything wrong with them. Does that make sense? White Bubbly Soup? That's my logic anyway. How important is for improvement to make a diary? Probably one of the most important things, if not the most important thing you can do. Because there's no way you can even know your mistakes or your bad habits or how a certain emotion makes you manage a trade, your management mistakes, how you feel when you enter too late, MAE, MFE, all of that sort of stuff. Yeah, it is very important to have a diary if you want to improve, I would say. Certainly when you're just starting out. A lot of the stuff later becomes pretty internalized with regard to having a journal. You kind of know when you've done something wrong because the trading process is so ingrained in you. But certainly when you're starting off and you don't even know yourself, you don't know how you trade, I would strongly recommend it. How do we calculate these nuts? I don't know, mate. Are there market conditions where you prefer cross-margin instead of isolated margin? Trav, I've got an article from 2018 on position size and leverage. You can just Google CryptoCred position size and leverage. It should come up. It doesn't really matter is the answer there. Hardstyle Festival Movies says, Cred, can you tell us more about stop loss placement? Some setups you have draw a very wide stop loss. Give an example of where you'll put the stop loss. Do you have a max stop loss percentage? So generally, your stop loss should go, if the market presents such an opportunity or such a set of circumstances, to the point where if it is reached, as in if your stop market order is reached, the trade idea is most likely no longer valid. And the thing is, you can reverse engineer that logic and say, well, I will only enter the market if it has presented me with a risk-defined setup, i.e. where the market has drawn or offered a stop loss for me that's kind of reasonable and high probability. For example, if we take a classic resistance pattern, right? When you have this, failed breakout, then the market comes back to the level. We've seen this a million times, right? And then the market starts to sell off. The question is, where is the idea invalid? Well, it's at the high, right? I mean, you could get something at the level, arguably, but really the idea is invalid at the high. So that's where the stop loss would typically go, right? Now, what that means is it's totally reasonable to have an approach where even if you have a level of resistance, so let's just keep this for a moment, and, we know that's our invalidation. If the market's coming into this level for the first time, so it's doing you've got resistance, pullback, and then it comes back, so we're like right here, it would be totally fine to have a system which says, I'm not going to sell this level, but I'm only going to get on board if it overshoots and gives me somewhere to put a stop. So when the market does this, overshoots, and then dumps, and ideally makes a lower low, it's given you an invalidation, right? It's given you a very risk-defined place to put a stop. So then the question becomes, how good is my entry / what's the best entry I can get now that structure has formed, right? And I've actually got a whole video on this on my channel, which is called Overthrow for stop loss placement, right? And this video covers this entire concept of kind of letting the market put a stop or, set an invalidation level for you. So go check that out. I hope that answered your question. How does your trading journal look? It's very informal these days. And to be honest, it's kind of all over the place. I have a Discord server that's just me, and I'll punt some stuff in there from time to time, just notes. I've got a handwritten journal as well for day-to-day stuff and also just general market reflection stuff. And from time to time, I've got a digital version, the OneNote or whatever, one of those writing apps where I make kind of bullet points and other things. Ever since discretion started playing a much larger role in my system, which has been a trend over the last kind of 6 to 8 months, results have been better, but the journaling process has also benefited from that discretion. I make notes of things that I think are important, notes that I want to come back to, and things that make sense to me generally, as opposed to just having a rigid entry, target, stop loss, setup name, MAE, MFE, etc. I think if you're just starting out, it totally makes sense to almost go overboard and have a journal for everything and be a bit more strict and really systematize things. But again, I've written about this before. The trend I notice among more experienced traders is that they'll start, or at some point in their career, probably after the first 3-6 months, maybe a year, they'll go down the very serious and very meticulous journaling route. And then, certainly with the discretionary traders I know, as they develop more experience, more discretion, and kind of carve out their own niches, shorter term edges, etc., that's when the trading journal also becomes not like an automated tracking system, but more of a place to reflect, if you will. Gosh, so many good questions. Cornholy asks about fractals. I'm the worst guy in the world about fractals. I wouldn't ask me about fractals. Amin says, do you have any advice on how to set up stop loss? Because I'm really bad at that. Watch the video on overthrow for stop loss placement on my channel. And there's an article on Medium as well for stop losses as well. I said as well a lot, but the content's out there. Just got to find it. Paul, consolidation below resistance equals pump. Consolidation above support equals dump. Do you agree? No. It also depends on the context. So that's a really tough one. So for example, consolidation below resistance equals pump? It depends, right? So you might have a weekly level, and you're looking at it on the hourly time frame. Market comes into it, bounces off, which is fine, then comes into it, and then starts consolidating. And then what will often happen is the lower time frame traders will get all excited at consolidation at resistance, forgetting that the time frames aren't aligned at all, and price can spend a lot of time here and even retest multiple times without invalidating resistance. And then once the consolidation, it'll kind of head fake and then end up in a huge dump. So it depends on the context. Consolidation at resistance is really contextual. What I can tell you, what I think bullish consolidation at resistance looks like is if the time frames are somewhat matched. So if you've got, for example, a daily level, daily price action at a daily level of resistance, so that's important. And then generally, you have weaker reactions from resistance. So this is the first swing. The second swing kind of gives you this. Then the third swing comes down and makes a higher low, right? And then it kind of pokes a bit further and kind of makes a higher low. Again, this kind of stuff's important, right? So what does market structure look like at the area of resistance? So if it's going to be bullish consolidation, right? Not that I think that's a good setup. What are you going to do, right? Are you going to long resistance, hoping to catch a breakout? So like the question is almost moot because it generally makes for some terrible trade ideas with very good exceptions, which Donald talks about a lot. But generally, for me, if you're going to argue consolidation at resistance, I think the time frames need to make sense, like the same time frame or at least one time frame lower. So you're not like buying high time frame resistance based on a low time frame chart, but also that consolidation isn't just price being at the level. Market structure needs to reflect increased weakness at the level by offering higher lows at the very least. But even then, the amount of times I've seen price come into resistance and is doing all this bullish market structure stuff, higher low, etc., and then the high time frame participants step in and just completely nuke that thing, and you feel like an idiot for buying resistance. I used to have a setup that would be based on this type of logic, which would allow me to essentially buy resistance and pray for the breakout, and I think there's a good reason I ditched it. Does that answer your question somewhat? I hope it did. Oh, Hamza says, do you feel that alpha will vanish since you leak a lot of techniques in your strategy in your vids? What do you think about this idea? I've literally made a whole hour-long video on what is, to this day, my best trading setup, and absolutely nobody uses it. I know like 2 guys who trade it consistently, and they get absurd results. And it's like a full video on my channel. So I think there is merit to saying, especially with short-term edges, right? With regard to timing the market or certain session times, etc. Like, I agree that those things shouldn't be shared, certainly if they're time sensitive or time frame sensitive or size sensitive. Just sharing those with Twitter for clout is like a stupid thing to do. But I've literally shared my best performing setup on all time frames on YouTube, and it still works just as well, and nobody cares. So in terms of leaking alpha, it really depends on how actionable it is and the amount of discretion involved. Can it be automated, and how much are people going to pay attention? So no, I don't feel like I'd lose anything by sharing what I share. But I still think it's really good. White Bubbly Soup says, when the risk setup is so obvious, is it better to set stop looser to avoid being hunted? I generally think so, yes. And this is something that's developed in my own trading over the last, again, rough timeline, 3-4 months, whereby instead of taking a tight stop at the level and just essentially risking getting wicked out while still, the idea still being valid, or just using really low time frame structures for stop losses, what I've actually started doing is taking wider stops but managing slightly more actively. So if the trade turns against me at the level, instead of losing 1R, maybe slippage straight away by being wrong, I can assess the price action on like lower time frames, etc. And with the wider stop, I can maybe lose half as much by cutting early. And that freedom and that space, I've just found, puts me in a much better mental state in terms of analyzing the market, where I can actually just look at price instead of look at my stop order. Do you know what I mean? Is English really your second language? You've certainly mastered it quite well. Yes, I've tried. But yes, it is my second language. Russian is my first language. Brendan, any chance we can get Diary of Offside Bull Part 2 for the top long? Enjoyed the first one back in the Corona Black Swan. I don't think that trade really merits its own Medium article, because the Diary of an Offside Bull is a really good Medium article, but it has some really pertinent lessons, and it was more the case that I just ignored recurring bits of evidence that were showing me that my position was probably full of dog poop. Whereas in this case, I took a very aggressive momentum continuation setup, and it was wrong. I don't think it's really the type of mistake that's worth its own article, right? Can the clean double close setup be done on all time frames? Most time frames, yeah. I mean, I like the higher time frame stuff or the intraday patterns at higher time frame levels, but I've seen people crack out with it on the M5 and M15 as well. So I thought you were British. Yeah, I get that. I get that. Why you were wrong? I mean, the setup didn't work. The setup didn't work. The market disagreed. I don't know. What do you want me to say? I think there's only so much after the fact rationalizing you can do with a trade gone wrong. I mean, you should certainly pay attention and see what could be learned, etc., etc. But at a certain point, you almost have to concede and just say, yeah, well, I took a trade and it didn't work, and kind of move on to the next one. A lot of the trade analysis that's done after the fact is just cope and with kind of confirmation bias and recency bias and all that type of stuff. There are limits to the amount of retrospective analysis you can do, you know? Do you think set a trade and go away will help controlling emotions for newbies? I actually don't think so. I think the whole set and forget thing is mostly peddled by bullshitters. You'll see them tweet like, yeah, I trade for like 5 minutes a month. I just set a couple of orders, ping pong, I'm rich, see you later in my masterclass. And no good trader I know trades like that. And certainly the ones who do have a more detached and hands-off approach, the only reason they've come to that point isn't because they've just traded set and forget and just set and forget. It's actually the reverse. They've probably got thousands of hours of screen time, spent hours and hundreds, thousands of hours looking at the low time frames and actual just accruing screen time, and then the result of that extensive screen time was a system that's more hands-off. But there's no way you can skip the difficult bit and say, well, you know what, I'm not going to dedicate the screen time, I'm not going to watch the market and learn how it ticks, look at certain sessions, look at certain candle opens, none of that. I'm just going to set and forget, and that's going to be my system forever. I've literally met zero traders who, even the ones who are more on the looser management side, who got to that without an astonishing amount of screen time. So anyone who tries to sell that to you and even just argues that way, they're like, oh, beginners should set and forget, it's total fiction. Where I think there is an interesting discussion is what role should trade management and kind of entry checklists play in developing traders. And that's something that I touch on in... bloody hell, which article is it? I think it's the Trading Psychology article. I write about kind of trade management and set and forget and all that type of stuff. But the fact of the matter is there's no way you can avoid the lower time frame stuff and accruing the screen time and the experience and trading intraday and doing all that sort of stuff. Again, if that's the route you take to a more hands-off system, be my guest, but that's just not a step that you can skip. Is Donald one of them? Yeah, certainly. That guy can do some absolute magic on low time frames. Don't be fooled. Do not be fooled. Any philanthropic goals? It's important to pay it forward and be charitable. Sure. Yes. Certainly. Please, what is this setup you are talking about on your YouTube channel? What do you think? Like, if you type in CryptoCred setup, what's going to come up? We could even do that, but I don't want to open my tabs and stuff. I mean, come on, mate. Pull your finger out, mate. Pull your finger out. God, man. That's the kind of frustrating thing, just, again, being real. When you create content, put it out, tell people it works, guide them towards it, and they can't even be asked to look through like 20 videos and find the most obvious title in the world, which has got the word setup in it. I mean, if you're that lazy, do you really think you're going to do well doing this type of thing? Come on, mate. Pull your bloody finger out. Oh, I'm going to give about 3-4 minutes on the title of the video. Monday markets, when are pullbacks trend reversing? And I think it's a really good question without a really good answer. As I said to Crypto Orion or Orion, I've probably butchered that. I don't think, like, some systems are very kind of trend following or will always have a directional bias, right? So for example, you'll have systems which say only long if price is above like whatever moving average, only short if price is, below whatever moving average, right? And those are kind of trend-based systems whereby some set of parameters will give you a directional bias and then you can only trade in that direction, right? Other systems are trend blind, which means pretty much the opposite of that. It's both ways. You can long, short, doesn't really matter, and it's really the structure and the levels which make sense. So as for the title, when are pullbacks trend reversing? It depends entirely on your system. You could talk about market structure, then someone will disagree and give you a moving average, and you kind of go back and someone else has a trend line. It just doesn't really end up anywhere. So that's why I prefer a level to level approach for the most part. Yes, I do have tools for giving me a directional bias on a certain time frame or even within a certain day. But I just don't have the forward-looking capabilities, if you will, to really just know when, like, is this the pullback? Is this the trend reverse? Like, look, I just take it one level at a time. And that doesn't mean, as per the FTA video, that somehow high time frame trading or swing trading is impossible. Because just looking at the high time frame chart, right, look how much space there is between structure, right? Where we are now, next high time frame resistance, and like next real meaningful high time frame support. There's a ton of space to swing trade in both directions, right? But asking me if we're like here or wherever else, is the trend intact? All of that sort of stuff, it's almost a useless question, right? Generally, when you ask questions in trading, I think, or when you're in pursuit of knowledge, if I can use a corny phrase like that, intellectual curiosity is good, but you should always have some sort of litmus test or filter to ask, is this going to help me actually trade? Or am I just doing mental gymnastics to try to find certainty in an endeavor that's ultimately quite uncertain and involves navigating a bunch of gray areas, right? Whew. That's all I've got, I think. Bitcoin should be fairly straightforward. At least you know the levels I'm looking at, and then there'll be plenty of time, newsletter and other live streams to provide some context. I'm not looking for longs quite yet. I'll just summarize very quickly. I'm not looking for longs quite yet because these are the monthly levels, and we had a weekly close below them, right? So not only did the weekly close below monthly support, but also we're just so close to 9.6 and this previous consolidation, which for me is a key range, that I feel like I'd be buying not only an arguable bearish retest, but also no man's land if I get involved here. I'd much rather play strength through 10.7, 11k, or trade back within the range on both a high time frame and intraday basis, rather than try to outsmart myself within this bit of sideways price action. Through 11k, we're back in business, trend continuation. For now, looks like a bearish retest, at least into 9.6 until proven otherwise. And if we get there, we do our normal range trading and wait for the daily closes at the boundaries for directional bias. Does that make sense for Bitcoin? Yep. ETH. Very similar, right? Very similar. We're looking at monthly levels. On the monthly time frame, 394 is a big level, and 300 is a big level. We look at the weekly, we can add, if we wanted to, this low at 360, and then we have to look at the weekly close. Just like Bitcoin, what's the weekly close showing? It's showing weakness at monthly support, given we close below it. So where would I rather long? Reclaim the cluster or the range that preceded the breakdown, And I think that's the easier long setup into mid 500s and higher. For now, I don't want to buy here because it kind of just looks like a bearish retest. Even if it pushes within the consolidation, it still looks like a bearish retest. Why buy resistance when you can wait for one of these to happen instead? So strength above the cluster, currently at resistance. Next support, if we get continuation, is around the 290 handle. Does that make sense for ETH? Well, there we go. Seems like I've done somewhat decently because we're getting yeses across the board for Bitcoin and ETH. Yeah. That's it. That's it. Thank you for hanging out. And I think we've breached 9K subscribers. So that's amazing. Almost 300 likes on this video. I mean, the support is just so fantastic. So I'm very grateful for that, and grateful that I can sit in rooms, speak my mind, and people actually listen. Despite buying 2 tops in a row, you know how it is. We win some, we lose some. Thank you to Bybit for sponsoring Technical Roundup. They are the reason that we can do these and them not turn into hideous shill fests and all sorts of reflink jamming malarkey. So thank you to them. If you want us to get fed this month, Donald stole my bread as ducks do overnight, so I'm particularly hungry. Click the links in the description, show them some love and support. Newsletter, link in the description, free as well. Same sponsor. Comes out tomorrow, so if you want the Ducks point of view, which I'm just going to paraphrase because let's face it, I bought 2 tops in a row, what right do I have to offer my opinion? So if you want to see Donald early, subscribe to the newsletter and get his stuff tomorrow. Him on Wednesday, blah blah blah, you know the deal. Love you all, hope you had a great weekend, and I will see you for the next one. Bye bye.